New fears of a possible recession on the horizon.
Gloom and red arrows on Wall Street.
Wall Street has gone into meltdown mode tonight.
The US stock market is suffering a downturn, and that pessimism has spread to Australia.
It's one of the worst down days in the last 20 years, excluding 2008, the GFC, and the COVID panic in 2020.
On Wall Street, the S&P 500 dropped by nearly 4% overnight, and it has plummeted by more than 20% since its record high earlier this year.
There's the old saying, when the US sneezes, we catch cold.
Analysts say the global sell-off is being sparked by US inflation figures, which showed the cost of living has jumped to a 40-year high. China's COVID lockdowns, the Ukraine war, and supply chain disruptions are to blame. Investors reckon it'll cause central banks to hike interest rates more aggressively, increasing the risk the US may fall into recession.
Australia could follow the US in terms of recessionary risks. Certainly at the moment we're seeing high inflation, high interest rates and low growth, and it's not a good combination.
The Australian share market has suffered its worst trading day in 2 years, shedding $87 billion. At its worst point, the ASX 200 had plunged by more than 5%. The ASX has also fallen by more than 10% from its record high.
If you are near retirement, then you do want to have a diversified exposure of assets, both equities, bonds, cash.
But new investor Kenan Herculoglu is not worried.
So I was down even, close to like 15%. And, as a married person, your wife would look at you and be like, oh, that's actually not good. But I'm like, you just have to weather it out.
He's hoping that fortune favours the brave. David Chau, ABC News.